Hello, everyone. My guest today is Fredrik Skantze. He is the CEO and co-founder of Funnel, which aggregates marketing data for some of the world's leading advertisers. Before Funnel, he led the team that developed Quaya Facebook advertising tool and co-founded the online e-commerce retailer AutoQuake. Fredrik, you ready to take us to the top?
Yeah.
What kind of name is Quaya? That is a hell of a name to try and remember how to spell.
Quaya, yeah.
Funnel is much better, by the way. I think funnel.io is much easier.
Yeah.
All right. What's Funnel do?
So we are a marketing data platform, and we basically help companies aggregate and bring in all their marketing data, put it all together so that they can then analyze it and report on it. So they really understand, what's going on.
Yep. And then update us kind of last time you came on, you shared kind of average ACVs. I think you had mentioned that you were trying to go up market. Have you increased kind of the average amount each customer is paying since 12 months ago?
Yeah, absolutely. So average customer value on a monthly basis was around $450 then, and now it's more than twice that.
Okay.
Now.
So it's fair to say kind of average customer paying more than $900 a month at this point?
Yeah, around $1,000.
And how did you drive that change? Again, it's a significant change. You had to churn probably a lot of logos that were, SMB-ish. How did you manage that?
Yeah, not so much churning, but just focusing on when we were bringing in newer customers. And actually it was partly driven by us and partly also driven by the market. So more as we became more established in the industry, as our product was more capable, larger and larger companies found us and wanted to do business with us. And then also having the capability of serving them, which has more requirements as you kind of move up market.
Mm-hmm. Now, you were at about 340 customers back in November 2017 when you and I last spoke. What have you scaled to today? How many customers are you serving?
700.
700. Okay. Yeah, that's good growth. Now, where have you had to change your kind of sales flywheel since then? And if so, how?
A little bit. So, we have substantially more salespeople. So we have specialized the sales roles a little bit. Some are focusing on smaller customers. Some teams are focusing on larger customers. We've grown our US presence quite a lot. We're a European company. We have also built out a pretty large office in Boston. So we have about 30 people in Boston.
How many total people on the team?
Just north of 100.
Okay. And how many are quota carrying?
Of those. So about 15 salespeople in general.
Okay. And how many engineers of the 100?
About 40 to 45.
Okay. So how did you, one of the things that, as people go from kind of where you were 2 years ago to where you're at today, getting kind of the salesperson pro forma right is something that's always being edited. So literally, what should quota target be? What should earnings, their full earnings be at OT relative to the quota, the new booking, AR bookings they're bringing in? How did you kind of take a stab at that initially and modify it over the past 18 to 24 months?
Well, I guess you experiment and see where you get at, and then you try to improve it. And it also depends on, whether, I guess we are sort of mid-market-ish or even at the lower end of mid-market. And at that time, we think sort of $5,000 in new MRR per salesperson is pretty good. Whereas if you are, per month. And if you are in the real enterprise, that gives us sort of a payback time of 12 months. But if you're in the real, enterprise space, you probably want more, but you'll have a lot fewer deals and a lot of misses as well.
If a salesperson is adding $5,000 per month in new MRR, why is that a 12-month payback?
Well, so you basically have, you see how much they bring in the year, and then you add the lead costs that you might be paying to generate that. You have an SDR team, you might do, advertising and so on. So if you fully load the full cost, then that's what it works out.
The cost of the salesperson or the cost of the customers they're bringing on?
No, the fully loaded cost of bringing in the customer.
Got it. Yeah, that makes sense. So 12-month.
it's not just what you pay the salesperson, but you might have lead gen costs, you might have SDR team, all the things around it.
Yeah, no, I understand that. So a 12-month payback at $1,000 a month in terms of ACV, that you're saying you're happy to spend $12,000 to get a new customer.
Yeah.
And when you split down where you spend that, when you split up where you spend that $12,000, you obviously have salesperson commission. Where else are you investing to drive that growth?
In lead generation, we do a lot of our lead generation online. Basically eating our dog food and spending it on digital advertising, and that helps us drive leads.
Which channel does the best for you?
All the big channels. It's not just one. You got to try.
Pick one so we can go deep.
So an obvious one is search marketing.
Mm-hmm. Okay, so search marketing. So in the search marketing channel, I mean, are we talking like you're spending $100,000 a month in that channel?
Something like that, yeah.
Okay, and how do you kind of back into your metrics? So just from that channel, how many leads would you expect to get from that channel?
So you got to say, okay, well, if I want to close 40 customers, how many do I have to speak to? Well, you probably have to speak to 400 customers in a month.
You mean 400 trials to get 40 new customers?
Yeah. Well, maybe not trials, but at least dialogues with customers. You got to speak to 400 people if you're going to close 40 customers, if you have a conversion rate of 10%, which is pretty normal.
Yeah. Is that what you're at right now, about 10%?
Approximately, yeah, from the initial discussion.
That's good. Now, that's obviously just your search marketing channel. But if you look at your total new discussions or your new demos or your new trials, however you quantify it every month, total across the company, how many new of those each month are you bringing in?
We have about a dialogue with about 1,000 prospects every month. But, it's high and low. Some are just want to talk. They're not good fits. So you got to kind of sift this through. And it's only, say 100 that really is high value, but those are really high value.
Yeah. Well, you said it at 10% conversion, that would be about 100 new customers each month from the 1,000 dialogues, right? Yeah, that's good. And how do you break down how your SDRs or your AEs kind of attach themselves to those 1,000 conversations per month? Is it geography based or something else?
Yeah, for us, geography absolutely plays in. We have a Boston team that handles the US and South America, and then we have a European team that handles Europe and the Middle East. We don't have a big presence in Asia at the moment, so geography, that's the biggest play, and then also the size of the lead.
Measured by what?
Typically by revenue or number of employees.
Okay, I see. So you have different motions, different teams, SDRs, depending on the team size of the lead.
Yeah, if it's a small lead, you want fewer people touching it. You want it to be more automated and more fast. But if it's a larger deal, then you want a whole team on that lead, from an SDR, from an account executive, maybe a product specialist, and really kind of staff up to be able to serve them.
Your annual gross churn, revenue churn back in 2017, you shared was about 35%. What's it today?
It's between 1.5% and 2% a month.
Okay, so 24% would be max.
About half of what we had done. Yeah.
Let's assume it is the full 2% per month or 24% in annual gross revenue churn. Does your expansion on the same cohort more than make up for the 24% loss? Yeah,
we have negative net churn now.
How negative?
A little bit negative. It's just turned negative. So maybe 0.5% negative per month.
So this is the same. Okay, per month. So this is the same as saying if it's per month 0.5 times 12, obviously it's 6% or negative 6%, right? The inverse of this would be to say that your net revenue retention is about 106%, correct?
Yeah.
Yep. That's great. That's obviously good. How do you get that? I mean, at your ACV, 106% is good, but I'd say world class or best in class is like 130, 135-ish. How do you get your net revenue retention up to that range?
Yeah, I think you do it primarily by having a much higher annual contract value. So dealing with larger customers, then you typically have much higher net retention. Alternatively, you have a model where, for example, like CRM, you sell per seat. You start by selling 5 seats, and then you just add. we don't really have that. We have a model where we sell the platform the way it is, and then there are some expansions. You might, buy some more feature set or buy more usage, but not to the same level.
Usage based off what?
Based on the amount of data that we handle or the amount of marketing activity you do.
Measured by dollars of like marketing activity?
Yeah, it might be ad spend or data quantity or number of data sources and things like that.
Okay, interesting. So you feel like you've not exhausted the pricing axes you can upsell against. Do you feel like you can make improvements there?
I think so. Yeah, we can probably get better at it. Yeah, it hasn't been our main focus to try to maximize how much money we make.
Yeah, well, obviously when you say it that way, of course, but you could also just counter, hey, if you were adding more value to customers, right, based on these pricing axes, more upgrades would be happening naturally.
Yeah. That's fair as well.
You'd raised 13 back in November of 2017, 13 million. Have you raised any more to date or still at the 13?
We raised some money at the back end of last year. About $8 million.
Okay, so total in the company today is about 21 million.
Yeah.
Why did you need the 8 million, and was it pure equity or debt?
It was equity.
Okay, and why did you need that extra capital?
Mainly because we invest a lot in product still. So we have about 45 engineers, and that team is growing quite a lot. And so we're kind of investing ahead of the market a bit there.
You've done this before, right? When you go out and raise 8 million and you have your plans in terms of hiring for engineers and things like that. I mean, how comfortable or how many months of burn are you usually raising for?
18 months to 24 months.
Okay. And is that just, so if we take 8 million, obviously divided by that amount of time, you can basically say that, hey, this guy he's okay with $400,000 a month in burn. Yeah.
That's a good way to put it. Yeah.
Mm-hmm. And what is your goal at the end of 18 months? Is it to get back to break even or start raising your next round, 12 months from now?
We'll probably raise another round. I think we see a opportunity to build a really large company, and we want to. That's what we want to go for.
When do you think that raise might happen?
Well, we'll have to see. We haven't quite decided yet.
Yep.
But,
why, if you did raise additional capital, would you definitely go the equity route, or would you consider using debt so that you don't have to take more dilution?
I think both are good. Yeah, debt is for SaaS companies when they get to scale. Debt is good. Yeah, it's SaaS companies tend to be valued as a multiple on revenue. So it's actually the calculation around it, taking debt in is a pretty good one.
Yeah, debt works if burn isn't like too crazy. It sounds like you're burning right now net about $400,000 a month. Is that right?
Something like that.
Yeah. But you haven't done any debt deals, but it is something you'd be open to.
Yeah.
Interesting. Guys, there you have it. All you debt providers listening, as long as your terms are good, you got to give them amazing terms. Otherwise, I'm going to beat the hell out of you. Okay. No covenants, no warrants, no personal guarantees. Give Fredrik a good deal. All right, Fredrik, good stuff. Last question here. 700 customers at $900 a month kind of average ARPU puts you at $630,000 a month in terms of MRR. Is that about right?
Yeah, a little bit more. So 670,000. So we're just $8 million in annualized revenue.
That's great. I mean, and what is that in terms of growth? I mean, hold on, I have the numbers. So last time you came on, which is a little over a year ago, you were doing only about 2.2 million. So it looks like about 4x year over year growth. Does that sound about right?
Yeah, from that time. Yeah, absolutely.
Yeah, that's good. Good growth. All right, let's wrap up here with the famous 5. Number 1, what's your favorite business book?
The one I'm reading right now is I really like. It's called Management 3.0, which is really about taking agile software methodologies to general more business practices. It's pretty dense, but it's a really insightful book.
Number 2, is there a CEO you're following or studying?
I like the team from HubSpot, Brian Halligan and Dharmesh. I think they've built a great company. They've managed to pivot into CRM and expand their market. They've built a good culture. I think they're a good team. They're in Boston like we are.
If Brian comes to you and says, "Listen, I like you guys. I want to buy the company for $80 million, all cash up front," do you sell?
No.
Oh, come on, Fredrik. That's a 10x multiple, all cash.
No.
You wouldn't. Interesting. What's the price?
I I don't think there's a price right now, but it would be much higher than that.
All right, number 3, what's your favorite online tool for building your company besides HubSpot?
We like a company called Israeli company called Gong. They do sales softwares for recording sales conversation and then transcripting them. A really insightful team, a very well executed product. You'd think you kind of get that from Zoom, but no, they just do it so well.
Number 4, how many hours of sleep do you get every night?
About 8 hours.
Okay, and what's your situation? Married, single, kids?
Married with 2 kids.
Oh, wow. And how old are you?
I'm 40, just turning 48.
48. Last question. What do you wish your 20-year-old self knew?
I think, getting out of corporate and doing something smaller where what you do really, really matters and sort of becomes more real a bit earlier. That's probably what I would advise myself.
Guys, funnel.io just hit about an $8 million run rate, up from, call it, $3 million just about a year ago. So healthy growth, 700 customers paying on average, call it $950, $1,000 per month. They are spending in a lot of different channels, but one of the ones is search marketing, right? They're spending, call it, $100,000 there per month, getting, call it, 400 trials, 40 new customers from those trials. So 10% conversion rate as they look to continue to scale, burning about $400,000 per month with 21 million raised, team size 100 people, 45 engineers, 15 quota carrying sales reps. Call it 24% gross revenue churn annually, but 30% expansion puts net revenue retention at 106%. And Fredrik's optimizing CAC right now to be right there around the 12, 13 month mark as they look to continue to scale. Fredrik, thank you for taking us to the top.
Thanks, Nathan.